Good evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. Well, the market started off gap up, but a little after midday started losing steam. The past since perhaps caught up. We saw some ragtag stocks starting to gather momentum in the last couple of days, and public sector banks showing a lot of verve. At some point that had to give, and today we did see some of the profit taking coming a little after noon, but you will have to say that the market still has a lot of courage to back momentum boys. The Midcaps ended up with 1.4% in terms of gains, despite the Sensex and the Nifty ending in losses. So looks like the bulls have lived to fight another day in another battlefield. The Midcaps in the momentum area. Hi, Surabhi.
Hi, Lata. Yes, and big policy day is behind us, so we're going to be getting you lots of analysis and opinion on what transpired at the Reserve Bank today. But first, the headlines. Volatility rules Dalal Street on policy day. The Nifty slips 1% intraday, but then recovers in the second half, finally closing with a cut of 0.3%. The Sensex ends down 115 points. Metal and auto stocks gain, but oil and gas stocks end weak.
Strong performance from Midcaps, with index closing 1.4% higher. Stocks like Punj Lloyd, Ceat and Escorts rally between 7 and 9%. Torrent Power closes up 9% ahead of earnings. Midcap banks like Union Bank, Canara Bank and OBC build on yesterday's gains.
Steel stocks rally 2 to 6% after CNBC TV 18 reports that the government is considering a 2.5% import duty hike on long and flat steel products. An additional safeguard duty ranging between 30 to 40% may also be levied to protect the domestic steel sector.
The Reserve Bank of India delivers along expected lines, keeps key policy rates unchanged, with the repo remaining at 7.25%. It reduces the CPI forecast for the last quarter of the current year by 20 basis points to 6.1%, but retains the January 2016 CPI estimate at 6%. Well, those were some of the headlines that interested the market today. Here are the experts that we have lined up on the show for you. We'll get you the key highlights of the Reserve Bank Governor Raghuram Rajan's monetary policy. And we will also tell you how economists like Jahangir Aziz and banks like SBI are reading the move. We will also listen in to Prabhat Awasthi of Nomura for his take on the markets, on corporate earnings, as also from the global space, Mark Mobius of Templeton Emerging Markets Group will tell us why he is still bullish on India and China.
All right, let's now tell you what exactly transpired. Dalal Street pretty much ignored the RBI monetary policy today. It was a volatile session with major indices closing with marginal losses. Anuj Singhal is now here with the wrap of the day's trading action. Anuj, Midcaps were really the stars today?
Well, it is all about mid-caps. You can look at the Nifty and say the market has been flat, the market has been stuck in a trading band. But look, the real action is in the mid-caps. The real action is in the non-index large caps. The Nifty Junior, the mid-cap index keep making new life highs. And today as well, the mid-cap index made new life high. And that too by quite a margin actually in trade. And a lot of high pedigree stocks rallied today. Actually, I'm going to take a bit of a departure from the standard practice and talk about the non-index stocks first, because today was that kind of a day. Look at some of these stocks and the kind of phenomenal moves that we saw. These are all high price stocks, but they were all up big time. MRF, probably the stock of the day, up 7% today. Asher Motors up 6%. Page Industries up about 5%. Not just that, there were some other big mid-cap winners like Adani Enterprises, Ceat, Pidilite, all up between 7 to 11%. The list doesn't end here. Union Bank, Motherson Sumi, SRF, all these names were rallying in trade. Apart from that, in the large caps, of course, we had metal stocks that they did well. Hindalco, Tata Steel and JSW Steel were all rallying in trade. Apart from that, in the Nifty, we have some winners like Asian Paints, BPCL and Bosch, all of them up about close to 3%. On the losing side, though, couple of stocks that dragged the markets today included stocks like Idea, that was down 4%, Cairn was down 3%, and Hero MotoCorp was down about 2.7%. And the reason the Nifty closed in the red today was because of three heavyweights. And if you take a look at them, Infosys was down 2%, Tata Motors was down 2%, and HDFC was down about 1%. So suffice to say that really It's all about mid-caps right now. At some point this party may end, but as of now, doesn't look like the end is anywhere near.
Thanks a lot for that, Anush. That point is taken. But as always, just a little bit of worries about the character of stocks that rose, especially towards the last 1.5 to 2 hours of trading. We saw a lot of the steel stocks buck up and the metal stocks. Besides, of course, the big boys, Hindalco, Vedanta, Tata Steel running up. We also saw a lot of the other steel stocks, Kalyani Steel, Electro Steel. I mean, these are companies which are in CDR or are even very close to reneging on their debt. We had companies like GTL Infrastructure as well rising. But coming to the steel part itself, there was a CNBC TV 18 news that probably some import duty hikes and some big safeguard duties could be imposed. It's not very easy to impose safeguard duties. The WTO frowns on them and India is a member. But nevertheless, we saw many of these stocks, notably like Electro Steel Castings and such like, rising very, very sharply. So I would be a little wary of the nature of this rally. And because of the rally you saw in steel prices, the public sector banks continue to rally. They have exposure to these companies. And the hope that the government is doing something to ensure that some of their distressed lenders will get help also made the public sector banks run a lot harder. Yes, these banks have been underpriced and beaten down for a goodish bit, and some bit of short covering was in order, but this has gone on for too long, and some would say too far as well. So we could be living in borrowed time, but yes, if you're on the right side of the market, nothing like being with the ticker.
Absolutely, and for now it seems the bulls continue to favor those PSU banks, some of them still running up in today's session. Okay, on that note, let's bring in our first market voice for the day. Prabhat Avasthi, Head Equities and MD India at Nomura Financial Advisory and Securities, says that he continues to be constructive in the Indian markets and that he expects to see returns of around 15 to 17%.
First of all, we are constructive in the markets, and I think just the rate action, well, if the rates are not cut, maybe some short-term disappointment happen, but I think if you look at the consensus forecast for the rates, even today, for example, the consensus is still talking about a status quo. So that's why I said it will be a non-event. Now, the market per se, I think we are bullish primarily because we think that clearly there is some sort of growth momentum build up because of the public spending that will come through going forward into this year. We are seeing some signs of sort of recovery from the kind of disaster earnings we've had for the last 2 quarters. So we think that you will end up making 15 to 17% returns from the market. We are positive on ICICI Bank, so I sort of that's our official recommendation. And, I would say that we have generally been positive on private banks more, for over a period of time. L&T as a company has become much more generalized, far more diverse, has added a lot of capabilities over the years. So it actually is probably the only company in the sense that if you are talking about a broad recovery, not really a sector-specific recovery, then this is the only one that you can, sort of look at.
Okay, so that's some stock advice. But coming over to policy, no surprises from the Reserve Bank Governor Raghuram Rajan. He stuck to the expectations, left key policy rates unchanged. The repo rate now stands, as it did in June, at 7.25%. However, the governor said the central bank's stance remains accommodative. And in a significant step, the central bank also cut its inflation forecast for the January-March quarter by 0.2 percentage points to 6.1%. The Reserve Bank said that it believes the risk around the 6% inflation forecast for January 2016 are now balanced. Speaking to the media, Governor Rajan explained his decision, saying the June rate cut was front-loaded and so it will be prudent to hold fire for now.
We're looking for whether the recent increases in inflation were temporary and whether the monsoon will continue to be near normal. The oil price development is very beneficial, and we will await greater transmission of our past front-loaded actions while we look and monitor developments for emerging room for more accommodation.
Well, on growth, RBI has maintained its target at 7.6%. The central bank says that recovery is work in progress, but consumption is showing signs of a pickup. Alava, you heard the entire commentary and what the governor had to say. Did he sound any more accommodative to you than perhaps in the previous policy?
In the previous policy, he cut rates and gave the impression that he has no scope to cut any more, or not. At least that was the situation at that time. But today he didn't cut rates, but gave the impression that he is looking for space to cut. Those were the very words he used, emerging room for accommodation. Accommodation is central bank speak for cutting rates. And he said he would monitor 4 parameters. One, the inflation trajectory, because the June inflation was 40 basis points higher than street expectations. The June food inflation was 60 basis points higher than the May inflation. So if that normalized, if the monsoon were better than feared earlier, if the Fed is not a danger anymore, and if there is adequate transmission, then he will look for room. So these are the 4 points, these are the 4 monitorables for the central bank, and if that happens, he will look for room for further cutting of rates. And he brought down the inflation forecast for the Jan-March quarter 2016 by 20 basis points from 6.3 to 6.1. So that definitely gives the impression that the door is clearly not shut on interest rates.
Well, but I guess it's still hinging on a lot of those ifs that you pointed out, certain very important parameters that the governor is looking out for.
The favored word is data dependent.
Data dependent, of course. That's what central bank talk, I think, seems to be. On that note, let's now find out what economists and bankers have made of Governor Rajan's policy today.
If you look at what he said in the press conference and also contained in the statement, monetary policy is looking at 3-4 quarters ahead. 3-4 quarters ahead, the relevant inflation target is 4%, not 6%. Even though RBI has tried its best not to bring this factor into play, the biggest factor is when does the Fed start hiking rates, and how disruptive or non-disruptive that might have on emerging market assets.
Our interpretation is that RBI is very much in a data-dependent mode, and therefore I think one of the things that the RBI has highlighted in the document is that after 2 quarters of inflation expectations coming down, expectations have gone back to double digits. There is no doubt that for the current stage of business cycle, monetary policy stance is tight. But the issue is we need to see the low spot inflation translating into lower inflation expectations. And I think that going up is a bit of a worry.
Have to make room for transmission. At this point of time, if there had already been some room for transmission, it would have happened. 97% of our resources are from deposits. So we need to look at our cost of funds to determine where the NIM is going. And we have to support that NIM to a great extent, because otherwise it has a direct impact on profitability. Also, you have to understand that the credit growth is not very robust as yet. Secondly, that the requirements for provisions is very high.
So on a rate cut before January is how much? What is the quantum you're expecting?
25 basis points, hopefully.
Next cut is quickly happening because RBI governor also very categorical say that there is going to be a lag effect, and we are right now caught up with that peculiar situation, credit not going up, asset quality not improving, and then there is a cost of deposits have also come down as steeply as it has been projected, it has been perceived. The moment we see some difference in our costs coming down, I think we are definitely bound to pass it on, because we are very important market player, and any cut in our base rate will only make us more competitive.
Well, the monetary policy actually turned out to be a sideshow, partly because there was no action, but partly because everyone was waiting for the governor to speak about the controversy surrounding the Monetary Policy Committee. The governor said the central bank has no differences with the government on the Monetary Policy Committee. They have broadly agreed on the committee's contours and the powers of the governor within that committee. So no fight, actually. In fact, the governor hinted that he does not have a problem if the governor's veto powers are taken away.
I will only talk about the veto issue, which has gained some public discussion. I mean, currently the situation is the governor has the veto. That's effectively all advice is only advice. Ultimately, the decision is the governor's. So if we continue to retain a veto, it doesn't change the current situation. It maintains the status quo. So that's something to keep in mind.
Okay, so if you keep the veto, then that's not really changing the way things operate. That's the RBI governor. He also spoke about the stress in the power and steel sectors as bad loans keep mounting. The government is planning to put more safeguards for steel makers. Sources say that the centre is considering hiking the import duty by 2.5%. Not just that, industry representatives will make a presentation on anti-dumping duty as well. Sources indicate that an additional 30 to 40% duty to safeguard hot-rolled coil makers could also be on the cards. The Prime Minister's office is directly monitoring the situation. That's the latest, and this news led to a rally across the metal pack in trade today. A lot of steel stocks we were discussing earlier were up and about. Gains on Tata Steel 3.5%, JSW Steel. A lot of the stocks were up and about in trade today.
Oh, absolutely, and a lot of the smaller stocks as well, which we should know, Tusha Martin, Maharashtra Seamless, Kalyani Steels, Jindal Steel and Power, Uttam Galva, all of them rising after this news. On that note, let's take a break, but coming up, Nirmal Jain will speak to us about his take on markets, and we will also get you today's earnings action.